Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. Yes, the Thunder and Lightning. Lightning will be on very shortly. We'll get Bob's take on all the retail sales numbers and anything else he found interesting today, tomorrow. Massive OPEX, massive, 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 massive. Can't state that enough. Also, 9 a.m. consumer sentiment preliminary numbers expected to still be higher than previous. So that's about it tomorrow. The big thing is going to be the OPEX. Pretty mixed. Tesla's holding up. Well, it must be because Tesla's such a great company. Other mega caps taking it in the shorts today. Healthcare, nice little rally, rollover in oils. Some of the investment banks, JP Morgan leading the charge. Yeah, Bank of America did pretty well. Wells Fargo. So some banks doing okay. Payment processors also getting hit pretty hard. But choppy down day. Again, choppy down day. 80% still favors that 75 base. That's the one that's baked in. We're not getting any more Tim Ross leaks, so not focused on that. Deep into negative gamma. Remember, OPEX tomorrow. Where do we close real quick? Well, we're still technically open. 39.16. We bounced off that 39.09 level. Gonna pay attention to that 3,900. That's the big one that I'm going to be watching tomorrow, because unless we get some massive rip your face off rally, 4K is just not going to happen, and I'm not seeing it happening in this environment. So your next major with all the put gammas right around 3,900. Now remember, we're pretty deep in negative gamma territory. So we can see volatility both ways, and you can get some pretty decent gamma swings if we alternate from both sides of the of 3,900, because you still do have not the kind of gamma you have at 4K based off your balance of puts and calls. But, tipping back and forth, especially at the end of the day, can drastically change some gamma hedging. So do not be surprised. Now, if we get that big push down below 3,900 and we get followed through to the downside, then those calls, gammas, will pretty much get off the table pretty quickly. That's where we sit. That's where we sit. Let's see who's here before we bring on the Bob. The person you all want to see. Waka Waka had a good trading day. Patrick, thank you for being here. Seems like mega caps keep pushing up the very last minute. No, it's not plunge protection, George. Please. There's no plunge protection today. And by the way, just think logically. From a hedging standpoint, why you have such a concentrated thing into a few mega caps, like Apple still making up 7%. So from a hedging perspective, it's really easy to hedge, especially moves if you're not going to use like the spiders or the futures, or you have to do it because of portfolio balancing, or you're offsetting some other arbitrage. You don't have to buy. If you need to focus on the stocks, you really don't have to buy all of the S&P 500 to hedge. You can buy a concentrated base of some of the mega caps and get most of your hedge in there. All right? So you got to keep that in mind. Don't go to a plunge protection, please. Please. You guys, definitely plunge protection going on for tomorrow. They need it at a set level. Oh. Bob, I'm worn out. I'm just hitting the Bob button. There we go. I'm worn out, Bob. I
Where's
cannot.
the protection when you need them?
Everything's not a conspiracy. Everything's not a plunge protection. Everything. We're not even a. This kind of sell off wouldn't even warrant a plunge protection. This is nothing today.
Nothing.
I mean, in the global scheme of things, yeah, it's a down day. Yeah, we had some volatility going into OPEX. We got some decent back and forth, amplified volatility. We're down 135 basis points in the S&P. It's not plunge protection. Sorry. Unless Bob, you might know better. Did you get the phone call that the plunge protection team was stepping in?
The VIX is only at
I
26.
know.
I mean, come on, guys. Come on.
I'm
The
sorry.
classic bear trap. Hey,
Uh,
Coco, how many of these red bars up here were bear traps? Just curious.
Wait, I gotta get back to. Oh no. I gotta say a classic bear trap. Can everything also not be a bull or bear trap?
Oh my God.
Please. Have we trapped enough wild creatures yet? Can we please? By the way, I want to clarify something because I talked briefly. Then we'll get to Bob. I said yesterday, I'm going to make this very plain and simple for people. Apple had potential double bottoms. That does not mean you buy. It's like, Bob, is there ever a potential for rain in Florida and you take an umbrella and it doesn't rain?
Yeah, pretty much every mid morning.
Okay. So you have a potential. You might be prepared like you take an umbrella. But if it doesn't rain, you don't do anything. You don't walk around with the umbrella up. Because you have a potential pattern does not mean, oh, well, I was thinking of front running it because, look, potential means it could happen in the future. I just want to clarify that for the really slow individuals who keep trying to front run patterns that don't even confirm.
Mike,
Sorry.
can you put a weekly chart, please?
A weekly?
Yeah.
On what?
ES or SPY, I don't care.
And we'll do. There we go. You got the
All
week.
right,
Let's
Coco.
just clean it up. There we go. You got the weekly right there.
All right, Coco. Starting in about January 9th, how many of those red bars were classic bear traps since the weekly is the close is the key? By the way, if the weekly close is the key, why the hell would you say today is a classic bear trap?
Uh,
Listen, today we might sound a little harsh. You guys have to realize that there's a thing that happens with trading, and people do it. It's not just you guys, everybody does it. I see it on news media all the time. Crazy day today. Literally, they say it 3 times a week. Today was wild. It's literally the characteristics of the market. Literally, these are just the market characteristics. They go up some days, they go down other days. They're up some weeks, they're down other weeks. According to Coco, every time they're down, even though it's based on a weekly close, every day is a bear trap. According to TomTom, none of these red candles exist because the market only goes up. And the market can go up without a plunge protection team. The last time I heard credible plunge protection team talk was probably 2018. And honestly, I don't even know if a plunge protection team has ever been admitted that it exists. Maybe it has, but I don't care. It has nothing to do with what we do. Nothing. Nothing at all. If you could even confirm the existence of a plunge protection team, that's number one. Maybe you can. I can't, but maybe you can. And I'm being serious about that. If you could predict that they are actually at work with 100% certainty, then you still have to predict when the plunge protection team stops buying, when they start buying, and if the buying is short, medium, or long-term effective. What are you going to do with that information? Have I told the Sushi Boy sushi story in here, Mike?
mm-hmm. Multiple times.
I have told it in here, right?
Yeah.
So now Coco says it has to do with the VIX. The VIX is only up 1%. I don't even know what Coco's talking about. Whatever. Classic bear trap. That's what this all is. So
I like it here. See, Amadeus has it right. Little red each day keeps Tom Tom away. Oh,
So I get, look, the basic lesson of this is you guys need to kind of try and, Mike has a great presentation on this. By the way, Coco, depending on where you drew your weekly trend line, we've broken it multiple times on a weekly basis. But I would guess that you don't draw very disciplined trend lines just from knowing you in here. But Mike has the hierarchy of questions. And it's a great slide in a couple of his different presentations. And basically, the hierarchy of questions, why is the weakest question? Why did something happen? Why did we rebound today? It must be the plunge protection team. Why was George Soros buying sterling? He actually wasn't. It was Sushi Boy Sushi. There's why doesn't matter. It literally means nothing. Okay? It literally means nothing. You Googled it, Gio, because everything on the internet is true. It's a working group on financial markets founded after the 87 crash. By who? Where's their offices? Again, I'm not saying they don't exist. I'm just saying that even if you could confirm they exist from something other than Google, I mean, actual confirmation, right? By the way, the dossier was real according to Google in 2020, but whatever. Um, Even if you could confirm it, you have to confirm what parameters they would come in on, when they would start, when they would stop, and what the overall average move is. So, on a weekly basis, whatever. Let me talk about retail sales real quick. I just want you guys to understand that, like, when I come in here and talk about the fundamentals, I've said this multiple times, I don't trade them. I don't. I might have an opinion on something, and then I'll go look at the charts. And a lot of the times, Mike will get a text or a phone call, and I'll say, "Hey, tell me if I'm missing anything in this chart because I like this stock or I like this commodity, I like this ETF, or I don't like them." I shorted crude on Friday. If you watch the podcast, I put on a short trade in crude. Um, from that perspective, it all has to do with price action. And I might have a fundamental thesis that makes me feel better about it, but I don't adjust anything based on my fundamental thesis because it can be wrong. It can be very wrong. So being in a room full of people that confirm your thesis does not mean your thesis is correct. Otherwise, the polar bears would have all died off, as Al Gore said in 2002. Anyway, things can change is the point. Speaking of change, retail sales. Okay. Retail sales up 0.3 on the headline number, right? All right, fine. X autos down 0.3. So without cars, it's not up, it's down. Without auto sales, there was pent up demand. Used car prices is one of the things that did fall in the July CPI figures, right? So pent up used car demand, maybe new car as well, but used car for sure, caused auto sales to spike to spike retail sales. The interesting thing to me is the X Autos retail sales was down 0.3 with gasoline down. It tells me two things. Number one, gasoline was being bought at lower prices. You remember that retail sales is not inflation adjusted. So the entire down 0.3 X autos could be accounted for by the drop in the price of gasoline. Literally the entire thing, which would leave us basically flat again on retail sales. But also last month was revised lower. Underneath the headlines, this retail sales was awful. It was an absolutely awful number. And it shows weakness in the consumer. Now, good news is bad news is good news. I don't know. I don't know if that means that the Fed's going to look at this and go, the consumer's already, they're already slowing down. Maybe we don't do 75 in September. I wouldn't bet on it, but I don't know if they're going to say that. Maybe they call the plunge protection team and say, should we look at, doing 50 instead of 75? Right now, you're looking at the CME Fed Watch tool. Last I checked, 80% probability of 75, 20% probability of 100, and a 59% probability of 75 in November. Is it still there, Mike, or is it shifted?
Yep, it's 59.8 for 75 in November.
So by the way, that's a target rate, right? So if they were to do 100 in September, that would be the probability of the 50 basis point in November because they go toward a total end rate, not an amount of change. They go to an end rate. So that's the end rate for the baseline to be 375 to what is it, Mike, in the middle there on the bottom? I can look
375
too.
to 4.
To 4, right? So they usually have a 75 basis point spread on the target rate. So if they were to go 50, that now becomes the probability of a 100 basis point rate hike, right? And it likely would shift after that if they went 50. If they went 100, that becomes the probability of a 50 basis point rate hike. Again, that would likely shift. My base case has been 75 September, 50 November, 25 December. I stick with that, but I won't trade it. I won't trade that opinion. That's just my opinion. So, anyway.
Bob, here's what you were referring to.
Yeah, I love this slide, by the way. The most empowering versus the least empowering in trading. Really in a lot of things, but apply it to trading. So just look at what, okay? What happened? That's the most important thing. What happened and what, if anything, should I do about it? I don't know if you'd phrase it any other way, Mike.
No, and what's the trigger? What's the stop? Why you can ask 10 different people and they're going to come up with different whys.
Mm-hmm.
How's it going to trigger? Well, I need a closing price. I need this. What's going to convert? All right, then you can get into who, like, all right, there's bigger players doing stuff. There's some macro fundamental stuff. But look, the first two, what and how. If you just focus on that every day.
Those are 75% of it.
Yep. And then everything else gets to be minor.
Yeah.
All right. Where do most people spend their day? Down here. Why? It's just, I get these newsletters that show up all the time, in the morning, or there's a market brief, and I get different ones, and you have Europe or Asia down overnight, okay, or up. It doesn't matter. I read the different ones, and there's 14 different reasons from different people why it's up or why it's down. And if it made sense, and wouldn't there be like one or two, not 14? People are just like come up with stuff. Oh, we had this. Okay. But then you have somebody else say it was this. Completely contradicting the first person. You've seen that. You have two guests looking at the same event, both on financial TV, and they completely opposite reasons why the same move happened.
Yep.
So what's the point?
So can you throw up Waka Waka's comment, weakness in consumer with high CPI is no way they're going to do less than 75? Theoretically, Waka, what you just said there is backwards. Weakness in the consumer might ease their mind about how aggressive they have to be on rates. Because what are they trying to do with rates? They're trying to slow the consumer. So if the consumer is already weak, okay, now, by the way, I agree that they're going to do 75. I've talked about that for a while now. I've disagreed with Jimmy on the podcast. Okay. But weakness from the consumer might give the Fed the idea that inflation is going to start to moderate. Okay. So what you're saying there, it's actually the exact opposite. We're already in stagflation, Waka. We're here now. And that's why the Fed needs to fight inflation. Doesn't matter if the consumer is weak or strong. It matters more jobs. Jobs matter more than retail sales. That's why the market didn't really move much on the retail sales number. It moved as yields went higher, right? But the way you worded that is actually quite backwards. If retail sales were strong as hell, okay, then that means the consumer is spending and they're going to continue to push prices higher. And the Fed would need to be more aggressive because regardless of whether in stagflation or not, they still need to fight inflation. Stagflation is a two-headed monster. It's a stagnant economy and it's high inflation. But inflation is what the Fed is focused on, not stagflation. Their mandate has nothing to do with stagflation. It only has to do with inflation. I bring up stagflation as a bad result because it hurts equities. And we all want to buy equities and hold them and have them go higher. That's what we all want. I mean, that's just the easiest way for traders to make money is to buy a stock and watch it go up blindly. That's why a lot of traders during these past 10 years have thought they were smart rather than thought they were buying shit in a bull market, which is what they were actually doing. Doesn't mean some of them weren't smart, doesn't mean all of them weren't smart. But to buy stocks from 2010 to basically the beginning of this year was not intelligence. It was not strategery, as Will Ferrell would say, doing an impression of George Bush. It was just buying things in a bear market, in a bull market.
And what's the famous saying? Don't mix up brains for a bull market.
Yeah. I looked at when we had our fund of funds, I looked at a gold strategy. Okay. I can go back to the time. There was a period of time when gold shot up and just it was a 12-month bull market in gold. I'd have to look at when it was sometime in the 2000s. And this gold strategy had incredible returns. Okay. The only time they lost money is in a couple of gold pullbacks. Okay. So I looked at it and said, okay, so what's your strategy if gold starts to collapse? And they basically said, well, we just add on till it turns around. Okay. Mike is cringing while he's laughing right now. That's because why? Here it is. It was from about '09. Their returns were like 3 years, but it was from about '09 to 2012. And it was straight up. And they're like, yeah, we have a great strategy. We rarely lose money. Well, the market never went down. I looked up that particular asset manager in about 2013, blown up, gone. They were gone. They had no more money under management.
You know, you know what my favorite one in the recent history was?
What?
The chart. Crude will never go to zero.
That
You know how many people got blown sky high because they were, I mean, literally when that was started dropping below 10, they were just buying it hand over fist and they got liquidated. It will never go. It's a no-brainer. It will never, it wasn't even not negative because I didn't think it would go negative, but it won't go to zero.
You know when I knew it would go negative? When the CME announced that they're allowing it to go negative. That's when I was like,
that was a warning sign. Yeah.
That was a warning sign. By the way, real quick with Coco there, he says tomorrow's quadruple witching. You can't predict what could happen, but yeah, Coco can predict it's a bear trap.
Well, you can't predict what is good.
I don't know.
You have to just trade with the probabilities. Again,
I like picking on Coco today because Coco's contradicting himself left and right.
Yeah, and that's why you can't. We don't try to predict. We trade the setups. Because if you do your research, you can assign, if you do really thorough research, you can assign probabilities to setups, then you're trading the probabilities. Yeah. You're not predicting.
What does Gary mean here? I don't know what Gary means here.
What about the trillions the government is putting into this market?
Yeah, I don't know what you mean, Gary. You talking about like infrastructure spending, like the Inflation Reduction Plan that's going to drive up inflation?
Or are you talking, I don't know. Well, you need clarification.
Yeah, I don't know what you mean by that, dude.
He's just said economy, so.
Yeah, I don't know. I assume he means the spending from like the Inflation Reduction Act. That'll cause inflation, but it's not going to necessarily cause stocks to rise. Look, government spending is some of the most inefficient spending you can have. If you told me that, you know, Apple and Microsoft and John Deere and Caterpillar were putting trillions into the economy, I'd buy everything. Okay. But government spending is one of the least efficient ways to spend a dollar. It's been theorized in a couple of academic papers and then also a couple of real world papers, that every dollar spent by the government is equivalent to about 12 cents spent by the private sector. So just because they spend it so inefficiently. So I wouldn't necessarily worry about that in the short term. Plus, a lot of this stuff, Gary, like some of the stuff from the Inflation Reduction Act, takes place in 10 years. That'll likely be 2 presidents from now and a bunch of Congress people. So we don't know if that stuff's ever going to get spent. I wouldn't worry about it, but
Yeah, I did see that right before we went live that FedEx did a major guide lower, and
yeah,
whew,
held up pretty
that
well considering that.
that took dropping from close at 204.87 to 175. That's a haircut and a half.
Yeah,
Wow. Guess the market didn't have that news priced in.
yeah.
What's the key level? 170. 170 is key. Not only for a little minor breakout level, but that if we get a close below that, watch out. I mean, you're going to see more and more of this with again guidance lower over to, especially with Q3.
Hmm.
Dollar holding up, you're going to see a lot more of this. Bob, what do you think about Elon? Oh, somebody had to bring up Elon. Elon tweet agreeing with Kathy Wood on 25 basis point move. He thinks we are going what the cut that he wants the 25 basis point cut. He thinks we're going into deflation.
Yeah, I mean, so I don't necessarily pay attention to Elon's economic opinions, especially on Fed policy. Um, but Kathy Wood buys Tesla, so I guess Elon agreeing with Kathy Wood. Elon's Mike and I have, I don't want to say different opinions on Elon. Elon cracks me up. I mean, he makes me laugh, but I also think that he's a bit shady, quite a bit shady. I respect his brain. Tell you that much, he's got a better freaking brain than I do. But
You're giving
he's
him too much
shady.
credit, Bob.
Yeah, well, he's shady and he's very self-serving. So I don't care about that. Somebody asked who the next hottie that's going to be on the podcast. Who was that? Was that Gio? I think it was George.
I don't know.
And
Are
somewhere at
we?
the top, somebody asked, Gio, was that you? It might have been Geo Mission. It's Steph Pomboy. We're recording with Steph Pomboy tomorrow. If you don't know who she is, you can look her up on Twitter. She's the founder and CEO of Macro Mavens. She's awesome, by the way. Super, super intelligent woman.
So,
You can
all
put
right.
up her Twitter, Mike, if you want.
Uh,
I like to promote the people who say yes to our podcast. She
well,
is brilliant, by the way.
that's a good thing.
Yeah.
I mean, there's only so much of my hotness you can have on at any given time. So.
That's awesome.
You know we're gonna have to, even if we don't do it with Jim, we're gonna have to run a separate mini episode just to recap some stuff at the end of
For
September.
sure. For
We're
sure.
gonna
We'll
have
do
to
that.
do that because we're hitting some key areas and stuff.
Yeah, no, we'll do that for sure.
Bob, consumer weakness is already showing up here at the dealership. We just got our first truckload of Toyotas today that had vehicles on it that weren't all pre-sold. We now have 6 Toyotas on the ground.
Is that good news or bad news that we
Well,
now have
I
six Toyotas?
mean, inventories now it looks like starting to build in the car. Remember, we've had car shortages for a
Oh,
long
that they
time.
were all sold. I see what you're saying, Sterling. I'm sorry. I misunderstood. Um, by the way, Sterling, call me. I think I want a Tundra. Anyway, um, yeah, so consumer weakness is definitely feeding through. And that's not what I meant when I said Waka's statement was backwards. Larry Summers said today that he thinks in order to get to 2% inflation, we need 6% unemployment. Okay, now I don't love or hate Larry Summers. I think some of the stuff he says is smart. Some of the stuff he says is ridiculous, just like anybody else. And I've gone on record as basically saying that I think that economics is a philosophy, not a science. I don't know why they call it a science because you can't frickin' prove anything beyond a reasonable doubt, you know? But from that perspective, sure. I mean, I could totally see that. I've said that before, that the Fed's target is going to depend quite a bit on what happens with the non-farm payrolls and the unemployment rate. But consumer weakness is definitely there. It's just a matter of how weak the economy becomes from that consumer weakness. And we're nowhere near, in terms of overall weakness, where we need to be to scare the Fed. And I think they made that pretty clear. I said I had two appearances today. One was on Bloomberg and one was on TD Ameritrade. And on both of those, I basically said that, the Fed said they're pulling guidance, but they gave us more guidance to this next meeting than probably any of the prior meetings where they actually had guidance. Because every single Fed speaker came on and said, we're fighting inflation, we're going to be aggressive. A couple of them even said, I'd be in favor of a 75. I mean, that's guidance. What else do you need? We're telling you what we're gonna do, but no guidance. No, no, no. So I think the market finally believes it, and I actually think, Coco, where are you, buddy? Did he leave? Did I get rid of him already? Um, I actually think that if the Fed does 75 now, and they just talk about being data dependent, we might get a rally and a fairly significant equity rally. Because now the market's starting to price in 100 and then 75 in the next meeting, and you could actually get a bit of a relief rally in equities if they're not overly aggressive after they do 75.
You know, it's funny. Financial
Coco's good.
conditions still aren't tightening, really.
I know. I
So
know.
it's like every rally, though, keeps the conditions even looser. And then people say, well, they got to pivot. Well, you keep loosening up the conditions. You're,
Yeah.
oh, Coke, there's your Coco.
There's my
75
Coco.
basis points and boom.
75 and boom, bear trap, moving higher, Coco.
Massive squeeze next week. We just got off a massive squeeze. Oh, I'm worn out. I,
Huge options expiration.
yeah, it'll at least free that up of the massive OPEX tomorrow. Now we're in the, I mean, we got the Fed meeting next week. We also have starting tomorrow the, you can't, no more stock buybacks. You got that frozen. Final 2 weeks of the quarter, and then through earnings. So you got that. It's going to get interesting. Going to get interesting.
Yeah.
Well, Bob, no tundras, but we'll call you when we get an application for one.
Thank you, Sterling.
So you're in the market for a tundra, huh?
I don't know. I just want to be like burn a lot of oil.
Should I buy crude?
I'm in Florida now. They love it. So just they
Well,
love it.
your governor's causing quite a stir by shipping people to Martha's Vineyard.
I thought that was hilarious.
I did too.
I really did. I mean, I actually had a Democrat friend of mine, and I'm not a Republican. I need to make that clear. I'm an independent. And by the way, I didn't vote for Hillary or Trump or Obama last time. I'm sorry, or Biden or Trump. I voted the independent candidate all the way down the middle, literally a voting independent. But the immigration thing, just the dishonesty with it, actually talked. So I had 3 TV appearances today, but one of them more of a political show. And we talked about immigration. And it was funny because a Democrat friend of mine said, really, your governor shipped immigrants to Martha's Vineyard? They don't have the facilities to handle that. I was like, who does? Who does have the facilities? She's like, well, why'd you ship them there? I'm like, because that's where Obama's house is. That's where they shipped it. I thought that was funny. I mean, human tragedy, but what are you going to do? Now all these people are like, how dare you? It's like, well, look, you come down here and help with it. Not an easy problem.
So, Bob, other than the Tundra hybrids, the Tundras are all twin turbo V6s that get 1 mile per gallon better than the 5? Huh?
I don't know what the 5 is, but I don't want things that get good mileage. I want things that get really bad mileage.
Uh,
Sterling, send me your biggest bad mileage car or truck. That's what I want.
oh boy. Oh boy. All right. Anything else you want to talk about?
No, that's it. I think if you guys could all go to Twitter and read my article, can you pull up Twitter, Mike, or no?
You had an article?
I don't know. Whoever's running Path Trading Partners never retweets me, even though I retweet them. Yeah, I wrote an article called "Will the Fed Be Like Mike Tyson or Floyd Mayweather?" And I was very surprised that CME Group posted it.
I didn't even
Because,
see that tweet.
yeah,
And I follow you.
I know. I don't know. I must be
Because
shadow
sometimes they
banned.
just don't show up.
I must be shadow banned.
You're too controversial. Maybe you're being, maybe, maybe you've been banned now by the plunge protection team.
There's the rest of Sterling's comment.
Uh, other than the Tundra, that will go, but then the 5.7. Okay.
What a joke.
I
They
better,
get
yeah,
one
you better follow you. You
MVP
better
better than
follow
the
Bob.
5.7 L8 LV8s. All right, Lauren's following me now. I've been waiting for that, Lauren. Come on.
See, Sterling's running the Twitter stuff, so Sterling will retweet more. Only retweet the good things. And if he says anything about Elon, don't retweet it.
I'm just going to repeatedly retweet "I love Elon" over and over again.
And
I don't, but it'll be funny.
yeah, then I'm gonna block you.
Of course you will.
See, Waka Waka. Bob watched Debunking Musk TED Talk 2022.
It's like searching things in Google. Why would I believe Ted? Who is Ted anyway?
No, it's actually dissecting the TED Talk that was with 4-part TED Talk with oh boy, Mister. I'm not an engineer, but claim to be one.
Ah, I gotcha.
Uh, so I don't see anything else. Thank you, George. $2 super chat. What gets this S&P to be down 50%?
50% from the all-time high.
Yeah,
A break of the June lows.
50. You think that's going to take us down 50%?
No, my target was down 45%, but so sure. Ted Chambers runs TED Talks, Mike, just so you know.
I am Ted. Well, we've got Ted from TED Talks in here. We've had Jesus. Who else are we gonna have? Look at this. Look at this live stream. Gonna take over YouTube in a few days.
Coco's not listening.
Bob, do you have any position? Didn't you just say you?
Yeah, short crude oil.
There you go. Now what?
Short crude oil since Friday. Coco, you are clearly not listening to the podcast, so I am no longer speaking to you. We are no longer friends, Coco.
All right. Waka Waka.
By the way, I'm neither to my own family members than I am to Coco. Everybody except my wife.
Waka Waka's S&P 500 target is 975.
Wow.
All
hope
right.
you're not right. That would be interesting. That would be a crash.
You know what?
We'll admit that's a crash.
That's beyond. That's.
I love you too, Coco.
Waka. I actually. Wow. What? All right. To get there, where do you think corporate PEs will be, and where do you think their earnings will be? I'm just wondering.
0 and 0.
No. Well, then you'd be at 0.
All right, I gotta go. It's my birthday. I'm going to dinner.
Where are you going for dinner?
We're going to actually, believe it or not, a Macedonian restaurant.
What? Macedonia?
It's Balkan night. This couple friend of ours, and just so everybody knows, Florida's not so rigid. There, it's a gay couple. These two guys we hang out with a lot. One's 100% Macedonian, and the other one's half Macedonian, half Serbian, and they both grew up speaking Macedonian with their parents. They live like 10 minutes from us, and there's this restaurant owned by a Macedonian guy who once a month has Macedonian night, and it's tonight. So they're like, Bob, I know you were going to go for sushi, but it's Macedonian night. I'm like, that's fine. I don't give a shit about my birthday. So we'll go for chivapis and whatever else they have. So I'm
Well,
good.
now you got some Sterling wishes you happy birthday. Waka Waka happy
Yeah.
birthday. Gary happy birthday.
Thank you guys, but it only means something from Coco.
Oh boy.
No, thank you guys for that. I appreciate it. Hey, Mike, I'm sending you a PowerPoint that I need to discuss with you. It's something we discussed about a week or so ago. All right.
Okay.
I had a discussion with the person that reached out to me about this particular product, and I told them your idea. So
Okay. All right.
I was allowed to share it with you. All right, guys.
Lauren, wait. Lauren wish you a happy birthday too.
Thanks, Lauren.
All right. You're going to have to listen to a podcast for his target on oil.
Yeah, listen to the podcast. Go. I'll give you the target from the, no, you know what? F you guys. Listen to the podcast. It's free on Spotify. It's free on YouTube.
John, happy birthday, Bob. Thank you for everything.
Thanks,
There
John.
you go.
Thanks, guys. I really appreciate it. It's not why I said it, but I just said it because I don't want you guys to think I'm being a dick, leaving the live stream early. So
Have a good one.
Thanks, guys. Cheers,
All right.
everybody.
It's just me. Now everybody can leave. It's just little old me again. All right. By the way, I'm going to give you a little tip for everybody who's stuck around. If you want the higher probability targets for trading horizontal channels, use 1 or 4 hour significant levels. You'll find them by looking for key closes and then matching them up with highs versus the highs and lows for coming up with targets. So as you see here from this little breakdown, and you can see how nice you can see. Don't really go to 15 or 5 minutes to try to do it. At least stick to 1 or 4 hour. And so we broke, retest, which gave the second entry, coming back, no close above the midpoint, and then coming back down. That's where, and Andrea asked this morning, 3909 was a minor level, so this is stop reduction, still targeting that 3900 at least for overnight, if not first thing tomorrow morning, and then we'll reassess. But that's how I like to do horizontal channels. They test it out a lot better that way. They don't test out consistently using highs or lows. You got to work off key closes that line up with other things. So there you go. And there's that I know she asked a question this morning about what about that 3909. I said that was a minor area for stop reduction. We just happened to stop there. So now with this breakdown on any rallies tomorrow, this same old level, this 3943 area is now key resistance. In front of there, I will be watching about this 3930, 3930, 3931. I'm going to pay attention overnight with the 1 hour rotation zone. And then tomorrow, the 4 hour should reconnect with this 3943. If, and that will be now substantial resistance. We did, after that close below the 62.5. Remember, the probabilities then were favored back from the 13th that we tapped the 87 to 100. We already hit the 87.5. So anywhere in here, not guaranteed, but I will watch to see if these hold and we get a short-term reversal pattern, especially since the next harmonic is right down by the September 7th lows. If we break below that, I'm not just talking tomorrow, 38.38. Again, just before I forget, I have offsite stuff to do tomorrow afternoon, so I will not be here at 3:30. I will attempt to run a live stream as soon as I get home, unless something happens. Well, probably still. If it's delayed even more, I will just pop on and let everybody know what happened. But I can't run a live stream while I'm driving back home. Just won't be that high quality. Unless I don't own a Tesla with full self driving. So I guess I'm SOL. You know? Gosh darn it, wish I had that full self driving. Uh so that's the little short term. By the way, if we had a massive rally tomorrow, it would be a buy, aggressive buy above today's high. Not expecting that to happen. And we have the Fed meeting next week, but we have that major overhead resistance. So keep an eye on the 1 hour rotation zone with the Asian and European markets, and then shift to the 4 hour tomorrow morning. NASDAQ also coming real close to those September 7th lows after plunging now through that 87.5 again. The key resistance, let me take off some of this other stuff. The key resistance is lower on the, I'm going about 12,100. That is this breakdown area, and there's the 4 hour. There, sorry, I have the VWAP on accidentally. There's going to be the 1 hour rotation zone coming in just above that. So that's the area I'm watching for on any rally overnight. There should be some major support right around these 11,921 lows if we test them. The next harmonic, see, we closed at that 11,969. The next harmonic's 11,856. Again, not much to go through. Dow also coming down. Dow actually testing the September, in the Dow is the September 6 lows. Testing there. By the way, this is a lower probability double just because of the flat formation of it, but it does qualify. But we need the trigger back above this high, 31,385. At this point, your key resistance is about 31,150. Next level's down in the Dow because it's already tested this. 30,922. Then majors not down till this cluster 3666. Is that level still valid? I gotta make sure I have it on the right thing. By the way, I'm actually going to revise that to the reverse harmonics. I should have revised it before. So ignore that 30. Ignore, this is your next. Minors 30,922, major 30,714 to 30,748. I already went through the target. What else do we need to? I don't even need to look at the Russell. The Russell holding up best of all. But we should still see the Russell eventually tagging 1796.8. But this holding up interesting. Well, I think we'll get some acceleration at some point to the Russell. The DAX closing below the 62.5. So now I have my major target on the DAX back to 12,720. Notes. Hold on, let me jump back there. I didn't have that on there. Hold on. Yeah, what am I doing? What happened to my, there it is. Yeah, I had it on the wrong, yep. Just verifying that with the DAX. Still this 114.19. Starting to watch to see if we can get any short-term bottoming pattern in here on the notes, but nothing yet. This cannot be traded as a double bottom, by the way, on the 1 hour, so no good. Nothing great there. Dollar index still staying within the corrective pullback flag / channel. But I really need the break above about 109.65 to get the breakout above here. VIX there's just not much fear in this market. Not much fear pulling back that key level, but I'm watching tomorrow morning this 27 level. Crude, we should see the retest of these most recent low area between 83.26 and 81.20. Remember, we're going to find out if if there's some buying power at that 80 level on the next retest down here from what they said about refilling the strategic petroleum reserve. Thinking if there's anything else. Bitcoin, again, with that close below the 62.5. Technically not done yet. I'm expecting it to. We should go to 19,061 at least. Tesla, double is still in place. Nothing else changed. And coming back up to this first little minor key area, there's lots of selling pressure up here. And it looks like we're getting a divergence. And it would be an aggressive breakdown play, sell below today's low on a closing basis only. That could possibly front run this pattern. Why do I hedge that a little? Because it is still friggin' Tesla. What else? I think that's about it. Hold on, I'll get to the comments now. Let me catch up. Can you check AMD? Do you think it will break the 71 low? Well, oh, good. We finally hit the 87.5. I think this will definitely test it. Why? And I think it will be broken because we still have a major sell pattern on the SMH, and longer term, I do. From a technical perspective, if you're just looking at technical indicators, you're still right. I forgot to update this trend line too. I'm expecting it to test this 71 level, which is the key magnet for the 200. You got a pretty big support base down here. So that is my primary target in the short term, but longer term, I'm still expecting earnings compression on this. We still at a PE of 32, and semiconductors can easily go into a more of a flat mode. So I am going to be watching for the next major trigger on the close below the 200, and that would take me into a clear path move, and then my next target is about 56 to 60. And if you want to do the harmonics, takes you 59.99. And that's his prior breakout zone, and I believe we will hit that. Until we get what would change my view is if we triggered this really big potential double bottom, but that's a long way off. And any rallies from my book now are to be sold, more so sold. Reinforcing at 87.5. So, yeah, that's your AMD. That's going to be key, though. I think it's got to test that 200 simple on the weekly and chip away at it at least a little before we roll over and get through it. I'd watch for a bounce play here, and then on another retest, a break of that retest. We should also, with weekly cycles getting the bottom, get some bounce plays coming up pretty soon. Mike, will you show me how to convert fib to harmonic in TradingView? Just put up your fib retracements. If you want the retracements, go to settings and erase all the values in there and go to 12.5% increments. So 0.125, 0.25, 0.375, 0.5, etc. That's how you do it. Can I explain why it's a buy above today's high? It would be a percent B buy signal for me on the S&P. with cycles getting to the bottom, and it would be aggressive. So it depends on your time frame, but that would not be a long-term buy. Again, don't conflate long-term and short-term. We're still in long-term sell mode. Any buy patterns are just like we had the last buy pattern, but that triggered back on the 7th, and you got 1, 2, 3 days, and then kaboom. So these are short-term buys, not long-term buys. From June low to swing high, have we gone back to 62.5? From this low to this close, not yet. Remember, we judge it on a especially daily or weekly closing basis. Don't go off a 5-minute close. I had some naive person, I'll be nicer, tell me, oh, well, I got a 5-minute close. I've even had somebody tell me they got a 1-minute close above or below that 62.5, depending on which direction you're going. I'm like, wait for the daily. They're like, oh, I front ran it off a 1-minute close. I'm like, oh, geez. Please use some common sense with trading. The lower time frames you go, the lesser the probabilities go. Think about it. It just makes sense. No, 389, 97.25 is the key level you're watching for in the S&P. It did not close below there today. Can you give me our Roblox? Can you give me the thoughts on it? Long term? I'm negative. We'll see some more downside price action. We finished the double. Right now, I'm watching for the next rollover play. We've stalled out with a potential. This is actually confirmed. This is horribly sloppy because of this pattern. But you can see it on the 4-hour. This is a valid double top that's confirmed. But not yet triggered. And that would take it back to about 38. So that's what I'd be watching. I am being patient on these with cycles getting to the bottom and OPEX tomorrow. We still have this gap also below. So what I am watching for a breakdown play is a break back below this roughly 42.50 area, targeting the gap fill, and then on a closing basis with a close below there, it can be rolled into a double play. I fully expect that's the trade. Now, from my other perspective, I expect easily a retest of the September lows. The only thing that's short term, if this double does not trigger it, if this stays in consolidation and we get cycles to the bottom, we start turning up, the only thing that would be a bullish play for me is then a daily close back above 47 if nothing bearish triggers. So right now it's in no man's land. A close back above 47.04 to be exact would trigger a move into a clear path move with a stop reduction at least being at the end of the clear path. I'd use 49.32 as a first stop reduction. Second would be 50.47 and a target area up here between 51.60 to 53.88. And I'd use the declining 200. And I'd consider possibly unwinding something because this is a major area right around this 50.47 area. But that's only after I get a daily close above 47.04. Other than that, it's sit on the hands. Now, if you get a 4-hour close still below here, yes, you can trigger, but you'd essentially be also triggering the gap fill play. That's what the first thing I'm watching for. There's your analysis on Roblox. Need a yet what? I don't understand that. What am I missing? Well, I'll see where we open. With that FedEx move, yes, we should gap down once the futures reopen in 25 minutes. When is the next rollover play in Netflix? Netflix. This is too big a mess right now, right here. The next play I would be watching in for Netflix is really a break here. You get your daily close. Below about 214, 213.90. You get a daily close below that. You're into a clear path move. All right. Then I'd be watching 196.19. Because on a continuation close below 196.19, it would favor a return to at least 173.87. That would be my next breakdown play. Other than that, not much. There's no topping pattern here. If you want to play something sooner than that to the downside, your only other thing is this gap fill play. But that's just for a gap fill. That's not for a long-term breakdown. Now, if you form another topping, if we rotate back up again in here, and you make a little topping pattern, you could have a front run pattern for a breakdown play that will target this low area. Yeah, it is an indicator of the economy. Completely agree. When you get things like the shippers, especially removing guidance going into a holiday season, that is very interesting. They didn't even guide, they removed guidance. That's what I saw while I was scanning stuff. You go when you get UPS or FedEx, which, hell of a lot in this country, there's your package delivery services besides Amazon's private stuff. But that's your privatized package delivery, and so much of the economy is run off of delivery of everything, not only business but consumer. So when you have them removing guidance, that is significant. Very significant. And I'm telling you, pay attention to this 170.86 level, especially if we close below there tomorrow. Not to say we can't rally, but then I'd be watching for a rally rollover play. I would not be surprised to see a snapback rally at some point, but then it would be a massive rollover play. Remember, the 200's an area. Resistance. Broke above it. Support. Support area also with that 50% retracement harmonic. Tested multiple times, popping up. Tested again, and then kaput. And no, this couldn't be traded as a head and shoulders in case somebody was wondering. It's way too downward sloping of a neckline. So you're better to just trade your harmonics. NASDAQ already closed the other day below the 62.5, Paul. That's why I didn't bring it up. We're already expecting NASDAQ's more volatile. I want the S&P, but if you see here with the NASDAQ actually it's closed the other time. Now, if you're looking for the big thing here, it closed, I thought, below here on this last dip down. Yeah, see it close back below here on September 6th. And this snapback rally didn't validate it. So it still favors a return to 11,402 at least. Uh, what's my viewpoint on? I don't know if we'll get a bloodbath in FedEx tomorrow, or are you talking the broad market? I'm gonna watch how stuff trades for European before. Again, we're trying to predict. The only thing I can tell you tomorrow is we'll probably have back and forth whipsawing action. Based off the close today, we favor some lower price action unless we get a strong recovery in Europe. I am watching, as I said, from this key level to this level. From my perspective, was if we hit this stop reduction, and then my primary target for tomorrow will be this low area. Now, that does not mean we can't plunge through it. That's my first target tomorrow, but I'm expecting some whipsaw action, especially around if we're sitting around that 3900s in the afternoon. That's going to get very interesting. Okay? That's what I can say. And this is a massive OPEX. We should see some decent volatility because, again, if you're at that 3900, you have that decent call. You have both put and call gamma in play, and either side of it can drastically affect hedging tomorrow afternoon. And I need to see, yes, we're going to gap lower in 20 minutes when this based off that FedEx stuff, but I have to see how the European session treats it because that's been a pretty decent predictor. Adobe, by the way, they had actually released earnings this morning. I thought my chart was wrong. And they announced the buy of that other company. What is my viewpoint on Adobe? Adobe, we finally hit the 87.5. Remember, we closed a while back below that 62.5 on the longer term basis. You can see it here on the weekly. I've had these lines up forever. We closed back below that 62.5 back on 7th of March and finally hit the 87.5. What is my thoughts? We might get not necessarily tomorrow, but we might get a minor stabilization somewhere in this area. You are trading against 87.5 and prior resistance becoming support area, even though it was broken a bit here with the COVID stuff. You still have this action in there that's pretty stable resistance. So in this area, I'm watching for a potential bounce play and then a rollover play, especially as soon as the daily rotation zone catches up. And I wouldn't even be targeting a full gap fill yet. I'd more be targeting potentially about 346, 338.26 to 346.58, and a key gap open was 349.24, but I'd be coming in front of that for any snapback play with a declining daily rotation zone. Once we get this, would not be a play for necessarily tomorrow. And then after we get to this, some of this oversold thing, I'm watching for another rollover play in Adobe. I'm expecting it to test lower pricing still. You still have a very high baked in P to E, even with this decline. I'm expecting much lower prices still. Well, not much lower. I wouldn't be surprised to see us test your over the next few months your 250 area over the next few months. Hey Jake, I already went through what I was watching for Netflix. It was about 10 minutes ago from this, so just mark your timestamp about here and go back and watch the replay. I don't want to rehash that. Don't forget to wear a green shirt for the rally next week, Coco. Why am I becoming the next Gordon Johnson? Because I actually think some companies should return to sane valuations, or because I think Tesla will eventually be a lot lower from here, and I think that Tesla growth narrative is over. I actually think Gordon Johnson's a pretty smart guy. He's early on things, but he's no dummy. He's a very smart guy. And he's not afraid to be contradict. He's not afraid to state the not popular opinion. There's nothing wrong with that. He does good analysis. He does very good fundamental analysis. So, a heck of a lot better analysis than people on Kathy Wood's team. At least he knows what he's talking about. Separate from Tesla price action, whether you're bullish or bearish on that, look at his overall fundamental analysis for a lot of companies, and he does some good work. Him and his team. You know, where I think a lot of Kathy's stuff is just pure and simple from her fundamental. I'm not even talking about technical and their stock picks. Her fundamental analysis and her team's fundamental analysis is just pure garbage. It doesn't even, and I'm not talking, yeah, you can value things from a growth perspective differently, fine. But it's literally pure garbage. Okay? Any way you slice it, it's garbage. Some of the stuff doesn't even make rational sense from even a growth perspective. It's like, okay, you might be eating some of those wild shrooms. So I disagree. I don't think Gordon Johnson is a page shill. Gordon Johnson's blasted only due to Tesla fanboys. Some of his stuff, he does really good work. And a lot of people will slant, but you know what? Tesla's an outlier stock, especially the way it's been. I'm not even going to start again. I get too much controversial stuff with that. Ignore anything he says if you don't like. Ignore, but look at the stuff he does, his analysis on other companies. It's really good. If you don't like what he says on Tesla, fine. I could care less. But that doesn't mean you throw out a complete analyst's opinion who does really good work. He's actually one of the few that does really good work. No, I haven't covered nat gas. We just had the snapback thing here. No close. I mean, you guys know what I do at this point. Let me take off these so you can see it better. We had the snapback rally. Could not get above that 62.5 on the closing basis. That's what those short term. Besides, there was an aggressive buy right here. Long term, no sell signal. Did not invalidate the double. So overall, this was not a snapback enough rally to invalidate the potential. Again, potential. You can bring your umbrella, but it doesn't mean it's going to rain. So the only thing now I'm watching after this little thing completed was for any more bullish plays, I'd have to get a daily close back above 917. Other than that, from a bearish point of view, I'm just watching this close below this low right here of 758.90. Or sorry, 753.20. 753.20. Let me bring back on my old levels. There we go. He must be paid by some outsiders. I don't think he's paid. I think he just has his viewpoints. There's been nothing that I've seen that he's paid to be controversial. I don't think he'd do that. He just is what he believes. So there's nothing wrong with that. You can disagree with him. You can disagree with that. I mean, you compare somebody like Gordon Johnson and what like a Kramer. Guess who'd I be using analysis from any day of the week between those two? They're night and day. Or between like a Kathy Ark thing or a Gordon Johnson. If I could only pick one of them, my analysis would come from Gordon if I had to, you know. Sam holding up. Well, then I'm going to wrap it up. It's been a long day. Overall, Sam's going to drop longer term. Sam will eventually take out some of these this 287 lows. Eventually, or at least retest them. I don't have a really strong bottoming pattern just yet. So right now it's in no man's land. And this isn't anything that needs to be played at this point. It can almost be played as an inverse head and shoulders. Almost. You can keep an eye on it. It's just sloppy because you got a messed up shoulder over here. But that's the area I'd be watching for a potential reversal. Until that hits, nothing. And with off this recent price action, you're right here. So let me just check something. No. Yeah. No. I'd just keep watching this 327.25 on a daily close. You get the close below that, you're gonna then probably retest these mid-June lows, and then I'd pay attention to how it reacts around there. I'm expecting them to break, but if it got a substantial bottoming pattern down there, then could look at it. Overall, fundamentally, I think this thing's going lower. But technically, we don't have a strong play yet. Yeah, the VIX, I think, is way underpriced. It's not putting in, and I agree with that statement. We're putting in, it's in a consolidation pattern, really. And for those triangle lovers, out there, it's pretty much a very horribly sloppy triangle consolidation pattern, which will break out at some point. This is way underpricing risk from my perspective, but besides taking advantage for long-term hedging, like I talked about the other day on dips, I think it's a gift. Anywhere down here for long-term hedges, or long-term plays, I think it's a gift. Other than that, and I think you at some point will get a pretty decent upside surprise in the VIX, but nothing yet. Well, Bitcoin I already said. I'm watching to see long term, still bearish. Looks like we're closing below 62.5, so I'm watching for the return to 18,527 to 19,061. By the way, Tether looks like it's up to its shenanigans again. So we could at some point see some kind of pop. I just can't wait. That's another reason I would like some kind of flush out in the markets again, because that will pretty much put Tether to rest. When we get Tether out of the crypto markets, it will be better. It might be worse for the short to medium term price action, but from the long term, it will get a lot of crap out of the market. I'm expecting easily a retest though of this low area before it breaks. Should we be looking for URA to retest this again? This is why I hope keep trading this around. My only advice is keep trading it around in a core position. The area I would be focused on right now, it's at a pretty critical juncture. If we break below here, this is what I have to analyze this differently. This is why it's around the core position, because the next add level is 2170 and then below that about 2099. And then major is 2016. Why? Not only is it the gap, if we start getting even more energy pullback, I'm expecting this 50 to easily get tested, and then I'm watching for a bounce play there, right here at that 50. But this on pullbacks is still to be traded around the core position. So I love trading, as I said before, between the harmonic levels. And if you're doing the shorter term trading, you can easily trade it around like shorter term harmonics. Especially you get a bounce around the 50, and you can fine tune it with breakdown or breakout zones, but you get the pullback to the 37.5 area with the 50. I watch for some shorter term moves, then I target it back to a bounce around 2267. Well, there you go, AB. And if you respect Elon Musk's engineer, not an engineer, you got something coming to you. So that should say something about my analysis. Nobody listened to my analysis. It's garbage. All right, I'm going to wrap it up. I got to see where these futures open in about 3 minutes. This is gone like almost an hour and a half. I got some stuff to do. I will talk to everyone later. Be back tomorrow, normal live stream tomorrow morning at the normal time. Nothing changes tomorrow morning. I will chat with everyone then. Bye for now.